August 23rd. So I'll be doing them every 2 months or so. So do be on the lookout for the next Success Summit coming up. So we are on air, folks, and excuse me, it's summertime. We got pollen here in Colorado. Welcome to Trading Week Ahead. We're going to be taking a look at our live markets and look at key support resistance levels in the S&P, looking at our sectors, right? And we've got some sector surprises, right? Semiconductors have been going down, gold's been going up, and we have a couple other surprises coming up later. As always, all information's for educational use only. Oh, thanks, folks, saying it's outstanding. Hey, thanks, Phil. Hey, Lee. Hey, Bob. Hey, TJ. Oh, another sale. Hey, I've got lots of sales. I'm a busy guy. My downloadable courses are 30% off using the coupon FREEDOM. So if you don't yet have one of those, I think my most recent one is one on tape reading I did earlier, 4th of July sale, 30% off. You can go to tradingvideos.com and that'll forward you over to the downloadable course area. And that's for individual courses, not bundles, and that's available as well. Another thing, I do have got so much going on, right? It's such a busy company. I've got a free open house for my live trading room day after tomorrow. And the link for that is on the front of the tradingtheopen.com website. Look for the open house link. So that's there too. That's me. That's a lot of trades I did. That's me back at the Money Show event. So let's take a look at our S&P. What's going on in our broad markets? Then we'll take a look at leading sectors and see where things are headed. You can see we're in a bearish engulfing there. The market did a fake out, right? It did a false breakout, as I told you it would last week. If you guys remember, I told you watch for a false breakout, right? The where I'm pointing is a definition of a classic false breakout. Market poked its head above resistance and then said, psych, boom, nailed it and dropped. That's why I was trading the inverse ETFs correctly on the drop in the market. Anyway, it's trying to come back to life Thursday, Friday, but hey, unless we break the 2970, I'm a skeptic. We'll see where it goes. It'll probably gap up on China trade news or something. It may run for a bit, so we'll see where it goes. We use 2,900 or so right here as a major support level. Now, some of the charts that my members have been getting lately are ones like this. And members in my live room at swing scans and small cap scans. So those are my alert services. And these are some of the ones that they got earlier. I'm giving them to you now so you can see examples of the types of charts that my members get. But I'll give them to you here as kind of because they still look good. So anyway, Boston Scientific, 43 whole number resistance. What I like is it's got an increase in volume down here, and it's got a small followed by a large whole row body candle. So that's a good breakout signal. Keep an eye on this one. And before we look at others, let me do a quick sector scan before I forget. Biotech sector looks really stupid and horrible. It's in the middle of a dang chart. Hint, folks, when things are in the middle of trading charts, don't trade them. That's the definition of bulls and bears are midway. They don't know what they want to do. It's like a doji. It's middles or dojis. Don't trade them. Insurance looks decidedly better. Banking sucks. Gold is fantastic. Gold's the #1 sector, and curiously, insurance is second best. Now, for those of you who remember trading semiconductors, they'd been selling off lately. So the SOX index is down, right? Or was down, trying to slowly climb back up, but it's still down in the muck. It's in the middle. So if you want to avoid false breakouts, you're going to trade into your lead strong sector. And right now it's been gold. But this is a late cycle breakout in gold. How many of you think gold's going to keep going up or do you think it's going to go down? It's kind of late. It's ripe. It may well keep going up. It may still have some juice left in it. But now it's a good time to take profit if you're long any of the gold ETFs or gold stocks. So raise your hands, or at least type in the letter up or down, or U or D. Do you think gold is going to keep going up or going down? We'll follow up next week and we'll see where it goes from here. What do you guys think? This is the part where you type in U or D, or up or down. Let's see, okay. At up, down, down, down. Move not over yet, IMO, up, down, up, down, up, up, up. That's what makes trading so great, because everyone has different opinions. Opinions are like noses. Everyone has one. And that's great. Up if the market's questionable, down, flag around for a while. Yeah, that's possible, Marcelo. Good point. That's what it did last week, right? Gold didn't get off its butt last week at all. It just went sideways. So it ran up, followed by consolidation. It may stair step its way on up or it may go back down. The tip is, sure, you can trade the gold instruments, which I trade them regularly, like Nugget. I often trade that one daily, or JNUG. But you might also want to be keeping an eye, arbitrage approach style, on dust. And I'll be covering this in a few minutes for my Swing Scans members with a specific strategy for dust. It's mostly all red lately, right? But it's got cut in half. It was a $24 a share instrument. Now it's down at $11 a share. So more than cut in half. So a smart trader would be thinking, it's still red and it may well keep dropping down to 7 or 8. So there's no guarantee, but because the fact that it's gone sideways in a consolidation mode means that we should at least pay attention to it, because markets move in cycles. Markets do big expansions and contractions, like breathing in, right? Like taking a shot at something. You take a deep breath, let it at half out, and slowly squeeze off the trade. Well, as you're looking for trades, you want to be looking at the opposite corners of the market. I've got an edge in this chart. I have freaking got an edge in this chart if it starts to bounce, and I'll be buying into it on the way up if it bounces. This chart has edge in it, right? This chart also has edge in it if it keeps skyrocketing up. There's no reason why it can't go to 35 or 40, right? There's nothing in its way. But you got to be thinking about that. And again, I'll do an article on it, but that's a good example of ETF arbitrage swing trading. You may want to look at my article in this month's issue of Stocks and Commodities on ETF arbitrage day trading. First article in the magazine. Be sure to subscribe to Stocks and Commodities magazine. Anyway, you always want to trade when you've got a defined edge or an advantage. That has kept me out of a lot of questionable trades. I still take occasional questionable trades because they look okay. But what I do now to help me avoid over trading is I always ask myself, do I have a clear, sustainable, intelligent edge or an advantage in that chart? And if so, how do I manage risk? How do I manage the entry? How do I put on the trade? Where do I manage exits? How do I scale in? How do I take profit? Here's a quick trail of stop exercise. Let's say you're a long nugget. Well, good for you. For a swing trade, where would you trail a stop? Type in I'm interested to see, we've got a big turnout today too, a lot of you here. Type in where you would trail a stop. Hey, Steve. See, 25.5, 25.3, 25.2, 25. I'll tell you where I would trail a stop. Let's say 25.8, 25.50. Looks like 25.5s have it. Most recent low at least 26, 25.75, 24.80. A lot of answers coming in. Thanks to all of you for posting. Where would I trail a stop in this thing? It's a nice gap up. The technical support is the high of the window, so I would take half the trade off at 25.50, and the drop dead stop loss would be 24.50. Okay. So that's how I would scale out. And that's the truth. Because look at it. Oftentimes it'll go down. Like sometimes it just falls off a cliff, and boy, I'm glad I took some off right here. But other times it'll go down a little bit and then bounce before it gets to the major support line. So you want to keep the trade alive, at least partial. So if I were long, say 200 shares, I'd sell 100 at 25.50, the other 100 at 24.50. And I put sell stop limit orders in place for that. So managing your exits, using a military term, your exfil. And I got lots of buddies in the military. I'm here in Colorado Springs. Our exfil, we got tangos inbound. I got your 6. Your 6 is your exit, right? Your 12 is your entry. You're going to get a backdoor exit out of the 25.5 and 24.5. Other good charts are small cap. Small cap gold has been a real golden ticket lately, right? Let's take a look at a couple of small cap golds like NG or Ego, right? Eldorado Gold, I think. Anyway, who can tell me? And again, we've got limited time here, but who can tell me what would be a warning sign? This thing looks like a real firecracker and it looks like a great breakout continuation. But visually, in the last several days, what's a warning sign that the buyers may be running out of steam? And what's a price action warning signal on the chart? See, an intelligent trader, you're always focused on your defensive plays. Like for those of you who are fellow martial artists, you know that much to our kind of disappointment, the first couple, 3 years is spent on blocks and falling. You know, your defense, not on roundhouse kicks and attack stuff like in the great martial arts movies, which I'm a big fan of, whether it's Jet Li or Jackie Chan or whoever. But the point is, play defense first. You know, if I had a brick and mortar trading college, what I'd be teaching people is trade markets and risk management and defensive plays. That would be the first year. Entries would be like the last part of the training. The first and most important part is your exits. That alone determines your profitability as an intelligent trader. A lot of small, yeah, Mira got it. Smaller candles, that's one. And lower volume, that's two. So right, the main thing I was looking for is smaller candles, right? So I should turn this over to Mira. She always has all the answers right. I'm impressed. No one else except Mira consistently over months has gotten everything right. So that's cool. That's good to see. Anyway, so we got small candles. So that's a warning sign. From a price action standpoint, let's see if anyone got it here. Right, Marcelo. Right, Adam. Yeah, I was looking for the one from Adam. The whole number's coming. We got a 6 on the horizon. Got a hot LZ, and we got bogeys everywhere at the 6. So we're likely this is a good place to take profit. This would be a fine place to take the money and run as a trader. I would see no hesitation whatsoever if I were long from, say, the 3.5 or the 4 or the 4.5 or the 5. Selling up here is a perfect exit. Because again, what comes to the back of your mind is you can always re-enter if it continues on up over 6, right? So I'd hit it or quit it. I'd quit this here. I'd sell it all on Friday if I saw this and I was long. This would be a fine place to sell or at least lighten up on the trade. Then with the thinking in the back of your mind, you can always rebuy if it gets over, say, 620 or so. Another new breakout. Let's look at another small cap gold instrument, NG. Same thinking and same price for that matter. If you're long, I can't tell you how many thousands of real money trades I've made where I've booked enormous profits by selling too soon, right? It seems like, really, you're getting out of the trade? That's usually the right place to exit. If you have that thinking, thought in your back of your mind, really, I'm out this early? That was usually the right answer because, wait a little longer and you'll say, oh yeah, I was right. Good thing I got out when I did. Because if I had stuck around and I'd be sacrificing profit because price came back down again. So this is a late cycle breakout. We got spectacular closing volume on Friday. So this may well gap up. I'm curious where it was trading after hours. Still 591, okay. Look at that size. Really? 19 million shares. Somebody bought 19 million shares at 591. Okay. They probably know something you and I don't know, but I'd be fine selling here because it's likely to do a little false breakout, then drop. And if it does come back to life, 620 or so, and not a trade recommendation, but that's where I'd be looking for a trigger point. So booking profits early and often makes a lot of sense. Again, our other featured charts of the week are STAR. This is one that my members had also got. We got a kind of little bullish engulfment after a drop here. Got a breakout here. Now here we have a small followed by a large forward body green candle. The other thing to look at, in absence of anything else when it comes to pivots, I want you to be using your simple moving averages. The blue line is the 100 SMA. When you break that, that's a trigger. the institutional buy program signal that high frequency trading algos love, and dark pools and iceberg orders start to flush in. You start to see large volume on institutional breakouts, right? Large volume delta once you break above the 200 SMA. So that's, if you don't get, it had support during its trading channel here at the 50. The 100 was the breakout trigger, and the secondary entry would be over the 200 SMA. And so how does that help us here? Well, I would just play the continuation move. Somebody bought a boatload of shares on Friday too, so this will likely gap up come Monday. So when you're thinking about it, the next entry would be where? I mean, you could day trade it at any new high, but for a swing trade, when things have run up this far, I usually like to use the nearest whole number as resistance and wait for at least 20 cents above the whole number. So 13.20 would be the earliest that I'd be looking at for a swing trade. I would day trade it if the volume and volatility were good, but it doesn't have enough intraday trading range to be worthwhile. So I'd wait for it to break over 13. Earliest entry would be 12.60, but that's risky. A slightly better entry would be to wait for it to break 13. Now if we take a look at our oil, UWT is bouncing, but it sold off big time yesterday. If anyone was trading it yesterday, remember UWT dropped. I was trading both UWT and DWT, looking for a play in DWT for a bounce here. Now the bounce in DWT would be over the 7 whole number, which not coincidentally is where the 50 and the 100 simple moving average line coalesce. That's a good word. Not a word you hear often when it comes to trading. They coalesce. They come together. Come together right now. Da-da-me, do-do-do-do-do. I'm a big Beatles fan too. I like the Stones, the Beatles, the Who, Pink Floyd, Rush, the Police, good bands. Young people like, who's that? It's not Justin Bieber. Anyway, here's a breakout trigger over the 7. So an arbitrage play would be for swing or day trading. Look for plays in opposingly paired instruments. Whether UWT comes back to life, I've been calling it long for everybody over the 12, right? And it ran up nicely for anyone who took it. Starting to drop here off the major moving averages. So if it breaks out over 17, UWT might be worth a shot. DWT, if it breaks over 7, may be worth the shot. And that's an arbitrage swing trade approach. And it's a real game changer. I'll do an article on ETF arbitrage swing trading as well. But this just hit the newsstands this week. It's the July 2019 issue of Stocks and Commodities. Read this. This one should get voted for the article of the year. And when people understand the profound impact and test it out, I'm sure it'll get voted article of probably, I don't know if it'll get voted #1 in the history of the magazine, but it should, because it's the only thing that outlines a bulletproof relationship. The only thing that's guaranteed in the stock market is that when inversely correlated ETFs move, the opposing one of the pair will go the exact opposite direction. Okay, and there's a lot more to it than simply that, but that's a profound exploitable edge that you and I have as a trader. And my traders learn how to do that specifically in my live trading room and also in swing scans. And we'll be going over more detail in that for swing scans members coming up. Let me know if any questions. I got a few minutes here. Well, we are at 10:20, so thanks for being here.